My barber had here in the Cayman Islands, if you haven't got a permanent residency, every 7 or 9 years you have to leave for a year and come back and reapply for your permit. And he'd been off for a year. And I just saw him last week. I'm like, Jules, what have you been up to? Were you working in the Philippines? It's like, no. I said, why not? He goes, Solana. He's like, I didn't need to work. I'm like, really? He's like, yeah. He goes, I made 10x in Solana. I spent a bit of that. Didn't work. So I spent a year with my family doing some good stuff, traded a bit of crypto. I'm like, okay. That's the empowerment. This is a barber from the Philippines that's working in the Cayman Islands. And he can not work for a year because of his investments. That's La La Land. Go to a barber in New York City and say, hey, you're not going to work for a year.
Raoul Pal, founder of Real Vision, predicts that the current Bitcoin bull market could extend into 2026, far exceeding conventional expectations of a 2025 peak. In a recent presentation, Paul reviewed several macroeconomic indicators, historical price action, and liquidity measures that he said paint a compelling picture of a prolonged bull run for digital assets. Mr. Paul noted that Bitcoin, like other risk assets, tends to be closely correlated with changes in the overall M2 money supply. If this is the case, the M2 money supply will continue to increase throughout the year. If so, cryptocurrencies and risk assets like tech will perform well throughout the year. Paul's thesis revolves around the impact of global liquidity and, more specifically, the role of the global M2 money supply as a leading indicator for Bitcoin and risk assets. His analysis draws parallels with 2017 when Trump's fiscal policies and monetary easing led to a prolonged period of dollar weakness, which fueled the cryptocurrency cycle. According to Raoul Pal, anyone can become ultra-rich with Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
I was writing about it in Global Macro Investor, and one of my clients wrote to me and said, Bitcoin. And this was 2012. And so I started digging into Bitcoin. By 2013, I wrote the first ever macro strategy piece to value Bitcoin. It was at $200. And I said, if I look at it versus gold, how much we know is above ground and how much we know is below ground, and look at that relationship, like with Bitcoin, what's mined and what's yet to be mined, it should be worth 700 ounces of gold. At the time, that would have been $1 million. And it was trading at 200. I'm like, maybe I'm wrong by 90%. It's worth $100,000. This is the best investment opportunity of all time. We'll talk a bit about why crypto matters in a bit. So that started me on the crypto journey. The other part of the journey is I wanted to help people. I felt uncomfortable being at the center of the financial system with all the knowledge, with all of the cool kids, the hedge fund managers and the banks, when I can see that the whole world around me was changing, that people wanted to take control of their finances. And so I thought the best thing I can do is democratize the knowledge that I have and that we have within the financial system.
A crucial factor in Paul's thesis of a prolonged bull market is the economic cycle, which he tracks through the Institute for Supply Management, ISM, manufacturing index. Regarding the altcoin market, Paul maintained that Solana and Ethereum remain key components of his portfolio. Despite Solana's recent decline, he dismissed fears of a long-term decline. Solana has outperformed global M2. Solana is expected to outperform Bitcoin for the remainder of the cycle, as is Ethereum, with SWI outperforming Solana. His broader view on altcoins is based on evolving risk appetite as financial conditions ease. Paul emphasized that large pullbacks are a feature, not a bug, of cryptocurrency bull markets. He detailed past corrections and noted that the current cycle has seen 7 corrections of more than 20% while maintaining a 600% gain from the lows. One of Paul's most surprising claims is that the current cycle could extend into 2026 rather than peaking in 2025, as many analysts have predicted. His reasoning is based on the prolonged period of economic stagnation that precedes accelerating growth. He said, the business cycle takes a long time below 50. It's just starting to extend now. This probably extended the cycle into 2026. Although he clarified that this is not a prediction but a working hypothesis, the implications could be significant. A longer cycle would allow for higher valuations, a sustained flow of investments, and a gradual rather than explosive peak. 2 leading cryptocurrency analysts paint a bullish picture for altcoins after months of Bitcoin dominance. Dan Crypto Trades highlights a crucial shift in the Ethereum-Bitcoin ratio that is sparking interest among crypto traders. The ratio breaks the bull market support band and reverses the market structure. Weekly closes above 0.026 would confirm this breakout and signal a broader rise for altcoins going forward. Historically, Ethereum has been the leading indicator of altcoin outperformance in the broader market. Dan explains. He refutes claims that Solana has replaced Ethereum as a gauge of altcoin strength. Solana's monstrous rally this cycle failed to support most altcoins, showing that Ethereum remains the key barometer of sectoral fluctuations. Raoul Pal cautions that success in altcoin season requires high conviction and smart asset allocation. Your token must outperform Solana, Ethereum, and Bitcoin to make an impact, he states. The macroeconomic expert emphasizes that weekly charts must demonstrate outperformance over time, not just short-term gains. He singles out SWI as his current high-conviction investment, citing its consistent outperformance and growth in network metrics. Both analysts are adjusting their portfolio allocations to capture potential gains from altcoins. Dan currently maintains an 80-20 Bitcoin altcoin ratio but plans to reach 50-50 if the strength continues. This represents a significant shift from his traditionally conservative approach. Raoul's portfolio is primarily comprised of SWI with exposure to Ethereum through NFTs, as well as positions in XRP, Doge, and other tokens. He describes himself as a mercenary of his own capital, who will change positions based on performance data. Experts agree that sector rotation will likely dominate stock market rallies. There are too many tokens for a universal altcoin season, but 2 or 3 strong scenarios occurring simultaneously could create profitable rotation opportunities. Raoul Pal has harshly criticized the Financial Times, defending Bitcoin as the best performing asset in history. He shared an article that denigrated cryptocurrencies as the domain of reckless gamblers, money launderers, and fraudsters, and urged investors to favor boring assets like cash and traditional investments. He highlighted Bitcoin's unprecedented performance against stocks, real estate, and commodities over the decades. The platform highlights the growth tensions between institutional critics of cryptocurrencies and proponents like Paul, who tout Bitcoin as a transformative financial innovation. Paul's arguments hinges on Bitcoin's ability to outperform traditional assets amid persistent monetary inflation. He highlighted the cryptocurrency's limited supply and decentralized structure as key advantages, contrasting it with fiat currencies that are vulnerable to devaluation. Critics argue that Bitcoin's volatility and speculative nature undermine its reliability as a store of value. However, Paul dismisses these concerns, saying that Bitcoin's annualized returns over decades far exceed those of conventional assets. He attributes this to its resistance to inflation and limited supply, which he sees as structural advantages in the age of monetary experimentation. While predictions such as a $100 trillion market cap remain speculative, Paul's statement reflects a narrative that presents Bitcoin as a financial revolution rather than a speculative fad. It's hard to refute Paul's analysis. Since its launch in 2009, Bitcoin has gone from a price of almost nothing to a unit cost of over $115,000 today.